Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update our view on the euro currency. So yesterday we have expressed some doubts concerning immediate bullish position because of the engulfing pattern on the intraday charts. The overall conception doesn't deny the ability of the euro currency to keep going higher, but we are called to be careful and wait for clarity around this pattern. So it doesn't mean that we're really don't think that euro currency could keep going higher, but it's always engulfing patterns also always brings a short-term bearish risk, and at least you could get better entry opportunity, and at the same time you could save your money to not be caught on up in the wrong direction. Today it's a bit more information we have, especially on performance on the intraday charts. At the same time, it is very difficult on euro currency to be really bearish because of the performance of the euro currency itself and on a cross-market analysis. So, for instance, if we take a look at the performance of the dollar index, you could see here nothing really bullish, so we don't have the attempt on the market to jump out from the support, and it's actually some kind of the pressure exists here. So despite market has completed ABCD right around the fib level, we do not see any real signs of the pullback here. So market is trying to do this, collapsed once again. So maybe here some tight consolidation suggested very probably this might be some pullback here, but for now it's nothing. The same on the 10-year bonds. Market's just moving with the pattern that we have discussed, and we have the acceleration of the dropping in the yields. When you see this type of action, it's low chances that somehow the currency, domestic currency, will rebound when the yields are dropping. So all this stuff mostly stands in favor of the euro currency. Maybe it is not really great bullish pattern, bullish driving factor, but at least it doesn't work in opposite direction. It doesn't suggest the drop in the euro. Now, if you take a look at the performance of the euro itself, on the daily chart, mostly everything stands the same. So we have here some inside session yesterday. It mostly stands in an area of Monday candle. But on lower time frames, take a look on the follow time frame chart, we have the tight wedge consolidation. And here it was a bit deep retracement with the engulfing pattern. It's too high for normal performance. So usually, in most cases, when you see this evening star or engulfing, it usually forms the hand shoulders, suggesting downside action. Here, supposedly it might be formed, but I suppose that it's a bit overextended. So in the current circumstances, with this situation in place, personally, I do not want to sell right here, especially because if you take a look across the part, you will see that we do not have bearish context. On the weekly chart, it's a double repo buy. On the daily chart, we have bullish trend. So that's mostly suggests that breakout out of this wedge is also possible to happen to the upside. Sometimes it happens in modern market, especially when you see classical reversal pattern, but market breaks in opposite direction. Especially this often happens with the wedge patterns. What particular moments we have to control here? Obviously, this is the levels. So the 104 still remains our invalidation point. This is important because break of the 104, it means the reversal breakout of the wedge consolidation to the downside and breakout of the confidence area. So it will suggest deeper retracement. For the shorter term, the existence of the 104.35, 104.50 area, it's also interesting. So that might be used if you consider taking a long position here. That might be used as a level where you could hide your stops, because if market remains bullish and the breakout will happen, obviously the confidence should remain intact. Also keep an eye on the possible bullish grabbers around here. So currently with these lows we do not have it yet, but MACD stands very close. And here the next candle might be the grabber. So also might be used for position taking, as a background for position taking. So on the hourly chart, inside of the wedge consolidation, maybe some other patterns might be formed. As an example, if market will show still some deep retracement, you could get, for example, Gartner's triple to buy. This also might be used with the stops against the same area, it's around 104.35, 104.50. So, because currently you could decide whether to buy or not in the current circumstances, but at this point, maybe I'm wrong, except the divergence may be here. But we're not at some strong resistance area. We have uncompleted 105.65 ABCD target on a daily. I mean of this ABCD 105.65 has not been reached yet. So maybe I'm wrong, but in the current circumstances, with this combination of the factors and performance of the dollar index and bonds in the United States, I do not want to sell. So whether to buy or not, you could decide by yourself. If you still would like to, we just have explained and described what particular levels you could consider and what patterns you could follow. But maybe it makes sense to wait a bit with the selling, because for me it seems right now it's too much risk with this.